Hello traders, my name is Rich Walden. First I'll give you a little history, a little bit about myself. Not everything. I executed my first trade in 1999. I was a gap trader back then. I was with Schwab brokerage, and fees back then were $29.95 for entry and another $29.95 for an exit. So almost $60 round trip for fee. Crazy. And if you take about 100, 200 trades a month, you can understand that those fees back then will add up quickly. And I love to trade. I love to trade fast markets as a gap trader. I love volatility in the market. I mean, I like it when it moves. I like it fast. And I would trade the New York Open in the morning for a while till the markets died down. Then I'd hit it again at the end of the day. And then I would have a strategy also to buy and hold overnight, because back then you can get Amazon at $200 a share back in 99. The online banking tech boom was rocking. I was approached for buying IPOs, and they didn't sell IPOs to anyone and everyone because the brokerages don't have a lot of shares to give out to their top clients. It was interesting back then. One day I walked into Schwab, and this lady says, "Hey, that's Rich." This gentleman came over to see me. Said, "Hey, you Rich Walden?" I said, "Yeah." I said, "What's going on?" He goes, "Can I talk to you for a moment?" I said, "Sure." He goes, "Hey, we're analyzing we're seeing how you trade, and we're analyzing your account. Man, you're killing it. And we want to know how you're analyzing stocks. Do you mind if you would give us like a little, not a seminar, but a little meeting with a group of us to see how you're analyzing these stocks and picking them? Because you're doing really well. And we actually have a group of 4 people watching your account." And I laughed. I'm like, "You don't understand." And he's like, "Well, what are you talking about?" And I said, "I don't analyze stocks. I'm a day trader. I'm a scalper. I get in and I get out. I hit the market. I wouldn't be much help for you." He goes, "Well, please give me some more information." I'm like, "Hey, green in, red out." And it goes for the opposite direction. Red in, green out. I just slam and jam every morning. What a fast market that was. Man, that was fast. That was nice. And day traders back then, they were not liked, in my opinion. They were not liked. If you weren't an investor back then, from what I gathered, they just frowned upon it. They didn't like you. But they wanted to know the information on how you can get into the market and survive. So that's a little bit. And I took a break for a while. But whenever the market is not challenging to me, I move on to something else. I've traded futures, options, stock, currencies, and currency was a beast. That was another beast. I get into currencies to figure out why a lot of people were not profitable in currencies, and there's just a lot of people not profitable, period. Or they may be profitable, but they're gambling, and they're gambling from other resources of money coming in. That's another topic. But you either have a skill or you don't have a skill. And if you think that you're going to go into the market without a skill or a skill set that you have not practiced over and over and over again, you will lose. You may not lose today, but you will lose it all tomorrow with a high probability. A skill set, people talk about FOMO. They talk about all these big words on the internet to sound professional. The bottom line is the skill will never leave your soul, man. The skill will never leave you. You can work on your skill daily and get better and better and better. FOMO, in my opinion, stands for fear of missing out, is a lack of knowledge in the market, man. FOMO comes from having a lack of knowledge in the market, a lack of skill. Why would you have FOMO in a market? If you had the skill, you wouldn't have a fear of missing out. If you had the skill, you would execute without hesitation. If you had the skill and your setup wasn't there, you wouldn't press that button to try to get lucky. And then after you win, you come up with this great idea of how you read the market. You can't read the market until you understand that you can read the market. A lot of people say they can read the market, but they can't. If you're not trading on the right side of the market, you're getting lucky. The highest probability is on the right side of the market. I teach that in the mentorship at breathingwiththemarkets.com. Again, that's breathingwiththemarkets.com. I'm not going to go ahead and post my strategies and edge on YouTube. I've worked my entire life, countless hours, days and nights in the market to learn my skill. No one can take that away from me. I can see the market immediately. I open the chart. I know whether I should be in that market or not. I've learned. That's learned behavior. That's not an opinion. That's not being cocky. When you can literally read that market and see that market, like some people that have talked on YouTube, they know who they are, and I know who they are. But I can look at a trader's setup and say, he got lucky. Unless he's a scalper, what is this 1 to 3 risk reward ratio? That's another thing. People are choking the hell out of the market. You must allow the market to breathe, traders. I like to breathe with the market. You know, when I was in Discords and I was in other educational courses and stuff, and I would even mention just a little hint of, they say, wow, what are you doing? How are you doing that? I said, I feel like I'm breathing with the market. And I am. I don't know how else to explain it. When you can breathe with the market and you understand the market and you understand what the market is doing at the specific time that in the chart that you're on, you know you have a skill. That skill will never leave you. That skill is earned not by how much money you have in the bank, not what you drive, not the Rolex you're wearing, not the fancy home. I'm retired, man. This is a hobby to me. I don't need it, but I enjoy the market. I enjoy the hell out of investing, trading. I don't like stop losses. That's me. I don't like a stop loss. I understand the market. I am confident when I make a trade. When I execute a trade, I am confident. I understand the market. Why am I going to put a stop loss for a manipulation wick to come down and knock me out of the market? Why would I do that? A stop loss is a false sense of security, traders. That's what I think. It's a false sense of security. If you took the stop loss away, you probably wouldn't make 99% of your trades because you'd probably be scared to death. And if you're scared to death, then you don't have the skill. And that's where FOMO comes in. But because you have a stop loss, you have security. But what you don't realize is you're going to die from 1,000 paper cuts. Your account is going to be gone. The brokers are going to be happy. Anyone can learn a skill. You don't go out and apply for a plumbing job if you don't have any plumbing experience, unless they're going to teach you and train you at the same time. Professional athletes have mentors. The psychological part of the game, physical part of the game, coaches, all professionals have some type of mentor or had one mentor or more in their life. Surround yourself by those that are better than you, not equal to. You're only as strong as your leader. You're only as strong as the education they provide. You're only as strong as the mentor is. If you practice, if you listen, if you approach the markets different. Why do 95% or more of traders fail? My opinion, a lack of knowledge, lack of skill. They go out and do this, what they call back testing, right? They back test 100 trades and then they figure out some win rate. I don't believe in back testing. That's just me. I don't believe in it. I believe in looking at a still chart, analyzing that language on the chart, looking at those candles, not what a pin bar candle is, a doji, engulfing candle, bullish engulfing candle, bearish engulfing candle. You know how many times I've heard traders in a Discord on YouTube and all these things, they have this zone. They have this zone that's 2 or 3 weeks old, and they're saying that they're going to short it. It's on a weekly, right? They're going to short it when he gets to the top. And as they sit there and they watch price going and going and going up to the zone that they're supposed to the short, they're going to take a short because it's a weekly zone, right? My question to them is, if you think price is going up to your zone that you're going to short, why in the hell aren't you in the trade already, going long? If you have the ability to think that price is going to get to that zone, why are you in the trade already? Oh, you think because you're going to enter the market that you're going to turn the train around. That train is full steam ahead. And you think just because it comes to a peak or a valley, your trade's going to turn this thing around. Think about this logically. Think about this, traders. If you think price is going to a zone, what you call a zone, then why aren't you in the trade? It's a lack of knowledge, in my opinion. I'm not downplaying anyone. I see the market differently. I have always seen the market differently. I don't do a top-down analysis. When 95% are long, I'm going short. When 95% are short, I'm going long. That's when you know you can read a chart. Because remember, 95% of the people don't know what the hell they're doing. Do you have a skill? And what level are you at? There's a lot to think about. Don't get down just because you're not profitable. Don't get down just because you think your win rate or your hit rate is not that great. Because you know what's sad is that a trader can have the best trade of their life, seriously, and actually be on the wrong side of the market. Tell me what that does to your head, and tell me what that's going to do to your P&L over a period of time. Think about it. The trade of a lifetime on the wrong side of the market, and then the guy or girl repeats it over and over and over again for a lifetime. They will not be profitable. You must understand the market as a whole, not having tunnel vision. You must understand the market. This is my humble opinion, but I cannot unsee the market. I cannot like turn on the market and say, oh, I'm going to look at a live market today and just watch the candles because I'm looking for the mouse to click some buttons. I can see the market that way. I can scalp. I can swing trade. Swing trading is boring. Higher time frames are boring. For me, they're easy and they're boring. I've been able to see the market breathe in and out by taking every currency pair, having a position in every currency pair without a stop loss. I've done that. I can see the market breathe in and out by looking at the phone. The screen is either red or blue and it continues to breathe and it takes small breaths in and out, in and out. Very small. And then all of a sudden, the currency market goes through an expansion phase because there's an expansion and contraction phase in the overall market. And if you don't think that the market's manipulated, well, then you haven't done your homework. The market is manipulated because I can see the market breathing when you have every pair, you have a position in every currency pair, excluding the exotics, with no stop loss on a 4-hour chart or a daily chart. And I can see the market moving together. I can see it expand and contract together. And I can see the small expansions and contractions, and then they start to get bigger. So then you're in the red and you go and you don't just press buttons when you go in and get all these positions. No, that's not logical. Okay. So for the naysayers and the haters, it's not for you, man. It's not for you. If you want to learn how to breathe with the market in your own style, and you want to understand how I look at the market and how I approach the market, sign up for one of my mentorships at breathingwiththemarket.com. Again, that's breathingwiththemarkets.com. Now let's get back to that contraction and expansion phase in the market. I could see it on the phone, just small breaths, and then they start to get bigger and bigger. And then they stop, then the red, because I don't have stop loss, it would go down in the negative. It would get a little bit bigger, then a little bit bigger. Then it would start to contract again. And then all of a sudden it would start to get bigger on the profit side. And then it would go down to break even. Then bigger on the profit side, go down to break even, then bigger on the profit side. So now we're in an expansion phase of the entire Forex market together. How many times, traders, when all of a sudden you turn on the computer, the past couple of weeks have been slow, all of a sudden it hits an expansion phase and you don't know it because it happens without notice. All of a sudden, all of these currency pairs just take off, and they take off together. How many times were you told that you should not trade all the pound yen pairs, pound USD, pound NZD? Don't trade all the British pound pairs together. It's not good. Let me ask you a question. Why not? Do you know how to read the market? If you knew how to read the market and you knew how to read the chart, you would enter when you saw your setup, regardless of the name. You don't trade the names. You need to learn how to trade the chart. Forget the name. The chart's going to tell you whether or not you should be in the trade or not, whether or not the trade is starting to ripen. All of the pairs don't run together. They don't. I know they don't. I've collected data on that. I've seen it myself. I've tested it. I've tested many traders' strategies. That is the only way that I am going to get better and better my skill level. I tested their support and resistance strategies. Did you know you can actually go on a 4-hour chart and you can literally close your eyes, scrunch the chart up, squeeze it all together, get the horizontal line, and start from the top and go all the way down and click, 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 all the way down to the bottom. Refresh the screen, and you will see the most beautiful support and resistance touches that you ever seen in your life. Jokingly, disclaimer, don't use that as zones. And then all of a sudden you see these people talk about how they pick the support and resistance, and they start counting touches. Try it, traders. Close your eyes. Go to a 4-hour chart, click the horizontal line, and click from the top to the bottom. Click it 50 or 60 times all the way down. Refresh the chart and see how many touches and how beautiful it looks on the chart, the screen. See how beautiful it looks. But we have traders that swear by this, that they on the touches. The market moves for various reasons. And when you can figure out how the market actually moves and why where it's headed and where it's going to dump, where it's going to reverse. It gives you those signals. It's a skill. I didn't say anything about predicting. Cannot predict where it's going to turn. When you understand the market, when you look at it, and a lot of traders are long, I just shake my head and I understand why they're losing. I understand that the frustration that they have, the education that they bought on what a candle looks like, the high, low, and close. I don't care about that. I don't care about a high, low, and close on a candle. I look at the market. Who's to say all the candles are the same in the first place? You could be on a different broker, different platform, different country. Well, the candles aren't the same. If you think they are, you haven't done your homework. How about prop firms? All the platforms aren't the same. You're not going to see the same wicks. I know that. I'm speaking facts, my own eyes, my own test, my data, my experience, my time in the market, my dedication, not to quit, being knocked down day in and day out, being knocked down again, day in and day out, trying the same thing that doesn't work until I know it doesn't work, by data, by the long nights, the stress, the tension in the back of your neck. Yeah, the thoughts that a trader really cannot explain on how they feel. Then when they try to talk to those who are not traders, quite don't understand how they're feeling. Traders, the only time we fail is when we quit. That doesn't mean take all the money out of your bank and you have to financially quit because you were trading live money when you shouldn't have in the first place. If you don't have a skill, you shouldn't be trading live. Everyone wants to go to live trading because they want to say that they're a trader. How about getting the skill first? The skill is number one. Skill first. The money, the pips, the points, the ticks follows the skill. The skill does not follow the money. It's learned behavior. Objective. Look at the chart objectively. It's not this intuition where people say, it's an intuition. I thought based on my experience, the market is going to turn right here. But they can't explain why. They just have this feeling. That's a gambler to me. Now, maybe they don't really understand how to explain their setup better. Possible, right? But gamblers, there's professional gamblers. Do they have positive cash flow coming in for their stop loss to gamble their trades, and then they get these windfall trades, and then they post, look at me, I $40, $50, $60,000 on this live account, and then they keep reposting these accounts, 50,000, 50,000, 50,000, 50,000, and then all of a sudden, they say that they're posting everything and they're being transparent and all that stuff on YouTube and blah, blah, blah. Well, let me tell you something. A skill is worth more than gambling. A skill is worth more than the fancy car. A skill is worth more than the fancy watch. You don't have to have a dime in your pocket to work on a skill. There are free platforms out there. Free. Why do you need and think that you must enter a live market and try to make money? If you don't have the skill, you're going to lose. Why would you go and think that you're going to play high school baseball or football and never played the game in your life? You're going to get crushed. Why would you get in a rink? And if you never knew how to fight in the first place, just because somebody's big doesn't mean they know how to fight. If you don't have the skill, why are you going to get in the ring? You're going to lose. You're going to lose by the person that has a better skill than you have. You don't challenge people. You don't challenge traders. It's not about who's the best and who's not. Challenge yourself. Learn. Think logically. If you are putting in your journal on making excuses on why you lost a trade today, but you don't even have the skill to take the trade. You have not learned the skill. How do you know you have the skill? You see, we can talk to ourselves and we can tell ourselves, yes, I have a skill. No, you understand you have the skill when you can look at the market, turn on the computer, and understand where the market's at and what it's doing at the time on any time frame. That's a skill. I know I'm not the only one that has that skill and that level of skill set where I can analyze and find tons and tons of reasons, and tons is exaggerated, of course, but numerous reasons why I'm taking this trade. Numerous reasons, not a fib, not that, all that stuff. No, numerous reasons why I'm taking this trade. That becomes a high probability trade. Just because there's news, the New York Open and all this stuff, it fakes people out and then goes in the direction it intended to in the first place. But if you don't know where the market's going to in the first place, you have not reached that skill level. It's not a guess, traders. It is a skill, a learned behavior. You have that opportunity to learn if you apply yourself, dedicate yourself. I decided to mentor students and mentees because I have this skill set that I've earned. I paid my tuition to the markets. I paid my education. No one taught me my strategy. But if you think that you're going to go through life without communicating with others who are more skillful than you, might see the market differently than you, and you go into your shell, you're only going to reach a certain level. You must surround yourself by those that are better than you, or those that might be equal to you but see things differently, to give you another view on the market. But I know there's other traders out there who are not on YouTube, who are doing their own thing, that could certainly give back to the community's amount of knowledge in the market. You do see things differently. You cannot help it. You cannot help it. I cannot unsee the flow. It comes naturally. Let me ask you something. When's the last time you walked into a restaurant with your loved one, your family, and maybe you forgot your wallet? You had to go back out to the car, and you come back in and say, hey, people at the restaurant, the desk there, hey, have you seen my wife? Hey, have you seen my girlfriend? They'd look at you kind of funny, right? Could you readily identify your wife or loved one or partner, whomever may be a friend? Could you identify them at Costco in a group of people? Could you identify them in a parking lot, a restaurant? Why would you have to ask somebody to find them? Because they don't know what the hell they look like. It's the same thing with the markets. It becomes one. You should be able to readily identify where you're at in the market. You should know whether to take a trade or not. People say, oh, don't use moving averages. They're lagging indicators. Oh, really? Lagging indicators. Okay. They're lagging to a certain extent, depending on the time, right? You can get smaller and smaller on a moving average, and the line's faster and faster. But these are the same individuals, the same traders that downplay moving averages, but yet they pick a zone that is a day old, weeks old, and months old. And they're telling you a moving average is useless because it's lagging. It's a lagging indicator. Well, why are they picking zones that are 2 and 3 weeks old? Isn't that lagging? They're on the wrong side of the market. They don't even know that. Why would you pick a zone that is literally a month old, 3 weeks old, and expect price to turn on your zone that has dust on it, dirt clods, mud? I don't get it. You see, maybe if they didn't talk negative about moving averages, talk negative about indicators, maybe the reason they do is because they lack the knowledge also. Let's think logically. Let's think logically, right? There's a lot of things, you know what? I don't like stop losses. It's because I understand the market. I can back it up. I can justify as to why I don't use a stop loss. Traders that say, it's poor risk management. God, poor risk management, doesn't use a stop, poor risk management. Oh, really? Well, you know what I'd say to those traders? Risk management starts before the execution of a trade, not after. Risk management starts before the execution of a trade, not after. My risk management is understanding the market, knowing where I'm going to get in. That's my risk management. Why would I put a stop loss there? I've already done my homework. I already understand the market. Why do I need a stop loss? I don't need a stop loss because I have the skill set and understand the market. Everyone loses a trade. Of course, the market will humble you as often as possible. But when you're confident enough because of how you can view the market, then you understand what you need without asking yourself, without wondering where the high and the low is as price sweeps that anyways. And a high and low, that's another thing. That's funny. Highs and lows, huh? Well, highs and lows, the market has to move. So why wouldn't it make another high and a low, or a lower low and a lower high? It's called breathing. The market is breathing. Has to do that. Just because it breaks a low and makes a lower high and another low doesn't mean it's changed direction. Who said that? It could change like temporarily, depending on what chart you're on, temporarily for a minute or two, a day or two. But that does not mean that the market has completely changed directions. No, that's not how the market works. I see the market differently. And a lot of traders do see the market differently. And that's what's great about trading. So I know I'm ranting. I'm going on, but I certainly have a lot to say. I wish everyone well. This is for education and entertainment purposes only. And trading is risky. And I am adamant, 100% adamant, you should not be in the market unless you have the skill set. And if you don't have the skill set, then you need to learn before you execute a trade in the live markets. If you want to learn how I approach the markets on a daily basis, please visit the site breathingwiththemarkets.com. Hit the like and subscribe button. One thing I'm not going to do is teach on YouTube or explain my edge on YouTube. That's just not going to happen. Thank you, traders. Have a great day. Peace.